Good morning, everyone. This is Nicholas Teo from Singapore CMC Markets. Uh, Markets off the bat, there's a few things to talk about. Firstly, this morning we saw just before the markets opened here in Singapore, actually the Japanese numbers, Japanese trade numbers for the month of March were reported, came in very strong on the export front, up about 8.5%. This is actually in line with the market expectations, but this is actually a 2 or 3 times growth or improvement over the previous month's read. So we are seeing a bit of reaction in the Japan 225. We are seeing it breaking through nicely above the 20,000 level. Key is whether we will have momentum to see this holding. We're seeing it, as you can see on this chart down here. It's had several attempts. Well, actually not several. This is the second attempt at it, and this move today is on the back of the last 2 days of strength, which ultimately erased the last 7 days or the previous 7 days of decline. This signifies a very strong momentum, and heading into the next few weeks or so, we will see corporate earnings coming out, and there have been suggestions from many corners of the market that corporate earnings are expected to be strong in view of traction of a lower yen, which has ultimately made a lot of companies like Sony or Toyota's a little bit more competitive the last 2-3 quarters or so. Something that we are keeping our eye on, and it's something that we feel reasonably good about. Also at 9:30, about half an hour ago, we saw the CPI numbers from the Aussie or from Australia come out. While numbers were sort of flat in line, as you see in this fund, more or less generally the whole series of them on a quarter-to-quarter basis, 0.2%, on a year-on-year basis 1.3%, which actually match market expectations. We are seeing a very nice reaction on the Aussie dollar. The Aussie dollar for the last little bit or so is trying very hard to actually break out from this range, as I indicate here. I mean the upside of around the 79, call it 80 if you may, and the downside down here of around 75, 76 if you may. So it's been sort of hovering at these levels or for the longest time, and obviously several factors play. This was due to the iron ore sell down, which the Aussie amongst most of the major pairs is most correlated to, but it's managed to hold this key support of 75.5, 76 level for all this while. So we're still going to see motivation of a further move or breakout of this, either on the downside or on the upside, coming from either domestic news in Australia or possibly what we may see from growth numbers perhaps in the US. Finally, a couple of stocks I want to bring everybody's attention to, and they are here: Singapore Airlines, Cathay Pacific. Singapore Airlines, if you may have remembered, is something that we've talked about before. I like it. I mean, we like it because it's been actually holding at a very nice level after this big move that we've seen. Okay, it's still holding, consolidating at some of these key Fibonacci levels. 12.15 at this level remains a key resistance. If this should break, we can see this push up higher to maybe around the 12.90 level or so. Now, if this fails to break after 1, 2, 3, maybe 4 attempts, we may see it pull back down to around the 11.60 levels or so. As always, what's going to motivate that move? If you just look at a comparative basis over here on this chart, Cathay Pacific has actually shot up well above its recent high, or its high attained late January or so. Now this has come on the back of obviously some of the strong performances in the Chinese airline stocks, but nonetheless they all operate in the same they operate in the same environment. Traffic has been reasonably steady for both of them, and they both have very aggressive fuel hedging accounting practices, which has ultimately hurt them. But Cathay has actually pulled away a bit more. China Southern, for example, today is up another 4%, and if I were to pull out the charts out here, you can see that they've actually stormed ahead even more. Almost doubling from a March level, from a $4 level here, all the way up to more than $8 here. So China Southern incidentally will be announcing results today. I think these could be trigger points for the stock and for airline stocks in general in Singapore, in the region, and I think watching SIA may be worth your while. Anyway, just a few bits. Thank you very much.